Hello and welcome back to another video. Today we're going to be looking at CDs and comparing them with bonds to find out which one's a better investment. Now by the end of this video you're going to understand everything you need to know about both CDs and bonds, and you'll be able to work out which one's a better investment for your money. So let's start with an overview. A certificate of deposit, also known as a CD, is a type of savings account that has a fixed term, often monthly, 3 months, 6 months or 1 to 5 years, and usually has a fixed interest rate. It is offered by banks, thrift institutions and credit unions. CDs are different from bonds in several ways. To use a CD, you deposit your money into the bank and agree not to withdraw it for a certain period of time. In return, the bank guarantees you a certain interest rate during that time. The longer the term length, the higher the interest rate you'll earn. On the other hand, bonds are essentially a type of loan. When you buy a bond, you are loaning money to the entity that issued the bond. This entity could be the government or a corporation. The issuer of the bond agrees to pay you a specific amount of interest over a set period. At the end of this period, also known as the bond's maturity date, the issuer promises to pay back the original amount you loaned them, also known as the principal. Bonds are a way for governments and companies to raise money. For example, a city might issue bonds to fund the building of a new bridge, or a company might issue bonds to finance the expansion of its operations. So what are the key differences between them? To start with, the issuer. CDs are issued by banks or credit unions, while bonds are issued by governments or corporations. Also the safety. CDs are insured by the Federal Deposit Insurance Corporation, also known as the FDIC, up to $250,000, making them very safe. The safety of bonds depends on the creditworthiness of the issuer. Also the interest rates. CD interest rates rise with the rate of inflation, whereas bond interest rates are set when the bond is issued and remain fixed until maturity. There's also a difference in the term. CDs usually have a shorter term, typically a few months to a few years, whereas bonds have longer terms, up to 30 years or more. There's also a difference in liquidity. Bonds are more liquid than CDs because you can buy or sell them on the secondary market. With a CD, you agree to let the bank keep your money for a set period. And finally, also the returns are different. When interest rates are high, a CD may yield a better return than a bond. When interest rates are low, a bond may be the higher paying investment. So are there any fees associated? Yes, there can be fees associated with both CDs and bonds, but they vary by financial institution. In general, CDs tend to have lower fees than bonds. This is because CDs are typically simpler investments that do not require a lot of management. Bonds, on the other hand, can be more complex investments and they may require more active management from a bond fund manager. So now that we know exactly what they are, which is actually better? In conclusion, whether CDs or bonds are better depends largely on your individual financial goals and your risk tolerance. CDs can be a great choice if you're looking for a safe, short-term investment. They offer a slightly higher interest rate than a savings account and are insured by the FDIC up to $250,000. However, they lack liquidity and may not keep up with inflation. Bonds, on the other hand, can offer higher returns and are more liquid than CDs. They can be a good choice for those looking for a predictable income over a longer term. However, the safety of your investment depends on the creditworthiness of the issuer. So this has been my video comparing CDs and bonds. Hopefully now that you've watched this video, you understand everything you need to know about both of them, and you should be able to work out which one's a better investment for you. Now, I also hope you enjoyed this video, and if you did, please go ahead and comment down below to say this video helped you out, and like and subscribe for more content like this. Thanks for watching.